All right. Well, good morning. Here we are. Today is Wednesday, September 11th, and we're here for Forex Live. Uh, what we'll be doing today is using our daily trading regimen to go through the market and utilize that along with the daily report to find some trade setups that we can take. The daily trading regimen, the purpose of that is to kind of keep our finger off the button until we gather all the important information that we need to so that we can make an educated trading decision that has the most opportunity for a trade to go our way. So with that said, let's go ahead and get started. We're going to begin by putting up a copy of the disclaimer here. Whoops, somewhere. And letting you know that unique experiences and past performances do not guarantee future results. I think we all understand that. We know that trading involves risk and that we should never use non-risk capital when we're trading. But I'm going to pause for just a second and give you an opportunity to read through that, and then we will get started with our day. All right, that should be long enough. Let's go ahead and close that. All right, so what are we doing here? Well, we're going to start with the Euro USD, and what we're going to do is we're going to walk through our daily regimen and just kind of step by step gather all the information that we need to, and we're going to do that 3 times on 3 currency pairs. Obviously, we're going to do this on the Euro USD, the Pound USD, and the US Yen. If there are pairs that you trade that are outside of that, then of course you can utilize the same method with any other currency pair out there. This is just repetition, repetition, repetition. We want to have a consistent approach to going into the market, which is going to give us consistent results. And that also the daily trading regimen gives us also an opportunity to write down what we're doing, why we're doing it, so it serves as a trading log for us as well, which is really cool. All right, so we're starting off with the Euro USD, and the current price is trading at 32.65. So we're 32.65 on the Euro USD. Now the first thing we're going to do then is we will pop over here to our daily report, and we're going to have a look and we're going to capture some information. We're going to record our channel information and some support and resistance information. So first thing we need to know is where's the top and where's the bottom for the day. Well, the channel top is listed as 32.93 and the channel bottom 32.48. So top and a bottom recorded there. Nothing significant. A lot of times we'll look at this and we like to see if there's any 2 of 3 or 3 of 3 channels that are lining up for us. So what we're meaning by that is the short term, which is what we're concerned about for today. Channel top and bottom is one of those lining up with the weekly and the monthly channel top or channel bottom, and it's not at this point. If we do keep pushing higher, 33.29 is a big number for us, and that's a 2 of 3 channel that's above us, so just a number to kind of put in your back pocket. If we break through here, we could certainly be looking at 33.29 for a potential reversal point. So just a number to kind of record and put back there. But for now, 32.93, 32.48 would be the 2 numbers that we're looking at. Now we're currently trading at 32.65, so that tells us here that we have some support down below us at 32.52, and if we break through that, 32.29 as the next level down, and if we break to the upside, 32.77, followed by 32.80 if we break to the upside, and then of course 33.29 if we broke through there, and it gets us up to our channel, or the 2 of 3 channel top. The next thing we want to know is, are we trending or are we oscillating? What's going on in the marketplace? So we'll pop over here and we'll have a look. Are we trending or oscillating for the day? Well, looks like we're really oscillating for the day. We've moved every bit of 38 pips. 38 pips for the day. Has our channel been broken? Have we broken above 32.93 or below 32.48? And so has the channel been broken? 32.93 way up here. And 32.48 way down here. Let's get it up. So has that channel been broken? No, it was, whoops, 48's up here actually. It was pierced and then rejected immediately. So, I mean, it has been pierced, but it hasn't closed low. So channel broken would be a negative. And we've moved 38 pips for the day. We said our average daily range, and that's the next thing we're going to capture as our ADR. Our average daily range on this is about 80 to 100 pips. We've moved 38 pips. So definitely we've got some opportunity for continued movement here. So looking at 38 out of 80 to 100 pips. Next thing we want to know before we make a decision on where we're going to start trading is there any news coming up? What's happening over here on the news front? And when we say, is there any news, we're really concerned about red reports. So we go to forexfactory.com and we pop over here to the home page actually, and it shows us, you know, what planned news events are on the schedule for the day. And we're concerned about the ones that are red, the high impact reports. The others, you know, could be impactful to us, but not as much as these red reports. These historically can be market movers. So we'll, you know, we want to see what's going on there. Is there anything that we should be overly concerned about? And right now, we don't see any major news for the euro, euro or the USD coming up in the near term. So we can say no. There is no news coming up. And then the last thing we want to have a look at before we begin placing trades is what's happening in the futures market. And we like to pop over here to finviz.com/futures, or just go to finviz.com and then click on the futures tab. And this will bring up a dashboard like this, and this tells us what's happening in the futures market. We're concerned about futures because this kind of gives us an indication of you know, if we're going to see strength or weakness in the dollar for the day. Typically, if we're seeing money flowing into the Dow, into crude, into gold, and into silver, we see money flowing out of the US dollar. If we see money flowing out of these, then we see money flowing into the US dollar. And that's because as we liquidate positions here, we're holding them in US dollars, and then conversely, as we start buying futures, we're taking money out of US dollars and putting that back in. Now, will that always be the case? Maybe not. You know, it kind of depends on what happens with the U.S. economy. I mean, right now the dollar is still kind of the safe haven, and that's where we hold our liquidity, but that could certainly change, and it has been changing over time. So we want to be cognizant of that. But for right now, as the Dow strengthens, the dollar weakens, and then conversely, as the Dow weakens, the dollar strengthens. When you see it kind of unpegged, or, you know, maybe the Dow is strengthening and the dollar is strengthening, that's just kind of a good sign to take heed. Maybe step back and wait a little bit, because eventually one or the other is going to pop and come in line with what it should be doing. So, but anyway, right now what we're seeing when we look at this futures dashboard is kind of a mixed bag, slight lean to the positive side, very, very slight lean to the positive side, which could indicate a weaker dollar, and that's what we're seeing here right now. So slight lean up on futures. You know, mixed bag overall, but that could indicate a weaker dollar. So what are we going to do with that information? Now we've gathered a whole bunch of information. We've got our channel information, our support resistance information. We know if we're trending versus oscillating. We know if our channel's been broken, what our average daily range is, which keeps us from buying the top or selling the bottom. And we know that there's no news coming out, and we know what the futures market is doing. So with that, all that information, we can now pop over here and start looking for some potential entry areas for this currency pair. Now, what do we have? Well, let's see. Let's just put some lines on the chart. We already put on our channel bottom and channel top. The next thing we need to put on here is our support and resistance information. So we have 3252, which is here, and we've got 3293, I'm sorry, 3277, which is here. Close. Come on. Which is here. All right, so what we've done is we know what our channel is. We know what our channel top and channel bottom is, but then we want to compress that a little bit and see beyond there what else, what other areas do we have that we'd want to be watching. And that's where we're seeing this 32.52 and 32.77. We could probably compress that a little bit more if we were really looking to scalp some pips, but I think we'll stick with these for now. So what we would typically do, and this market's just been dead, by the way, I mean absolutely dead, which means it is going to break. It's going to break one direction or the other here very shortly. We don't know which, so what we want to do is we want to park some buys and sells on here to take advantage of that. Now, typically, I like to bracket orders in, and that's what we'll do here. So, actually, let's compress this just a little bit more and see. Actually, we don't even need to, really. That's looking pretty darn good as it is. You compress this a little bit more, you really see this 32.62. I mean, you can just about put a line anywhere on a chart. I mean, that's been pretty well supported, you know, throughout this session. We saw that as support, 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 touched it, broke up, touched it, is support, finally broke through. It was resistance for a bit, broke it, and now it's struggling back at this 32.62 area down here. I mean, that you look intraday and you can say, wow, you know, for this current session, this is definitely, you know, setting up as a support level, kind of a decision point, really. The way I'm seeing it right now is price needs to figure out what it's doing off of this, because we're sitting right here, you know. So we've got a support level and a resistance, or we've got a support level and a resistance level up here, and we've got kind of a decision point at this 32.63, almost right in the middle between these two. It's such a tight market and such a tight range today. It's tough to really say where do we want to go on this one. I'm surprised that we didn't open up a bit yesterday. You know, after you know, over into the Asian session. I'm surprised we didn't see more action here. So what I'm going to do is I'm going to just look for this to pull back a little bit more, and I'd look to buy it off of 32.52. So we're going to do that. We're going to put this here, 32.52. Oops. And all I'm doing is I'm using the chart trader software that we have with our system, and I'm going to look to take profit, you know, pretty quickly, about 8 pips or so, 7, 8 pips. And then I'll take my second profit right here at this this next level up. And because it's an oscillating market, you know, even though we've got kind of a decision point here, what I'm looking for this to do is for it to push down. So we've got kind of a decision point here, right? So what I'm looking for this to do is to push down to this 32.52 area and at least come back to retest this area here at 32.62, which is, you know, about a 10 pip range. So I'm looking for it at a minimum to come back, retest here, bounce this. Even if it, you know, repels down from there, that's great, you know, but we'd be able to get into a trade. Because of the way the futures market's currently leaning, I'm also looking for dollar strength or dollar weakness. So, you know, if it does push back here and get us filled, it may continue on. So you may want to buy, you know, as it pulls back. And we would do the same up here to the upside. We're going to bracket this order in. I didn't set my stop on that one. We're going to bracket this order in. We're going to do the same here. So if it pushes, so if it breaks from here and it pushes up, I would still expect it to at least, you know, use an area of resistance, repel off, and at least come back and retest this before it moves on. Because it's an oscillating market, you're typically going to test and retest your support or resistance areas a little bit more often than you would if it's into a trending market. Typically in a trending market, we'll see it maybe hit once or twice and then just go. And this will eventually break out. It definitely will. So we want to try to catch that breakout as it pulls back, or, you know, pulls back one direction or the other, and catch that move. And that's what we're looking to do here. So we're going to park this trade up here at 32.77, and then we'll do the same for our profit taking. We're going to look to take profit, you know, pretty quickly, and then I'll look to peel the rest of it off right at that at that resistance level. Right here. All right, now once those are set, then all I have to do is I click move to buy and sell. And then there we're in. It'll be interesting to see what really happens today. You know, I think the markets, they got so slow last night, didn't hardly move at all, you know, waiting for what Obama was going to say last night to Congress. And I think we'll see some movement here in about 20 minutes or so after the floor traders come online and really start pushing us one direction or the other. All right, so we got that one on. Let me just make a quick note of what I did, why I did it. So I'm just filling out this daily regimen form, by the way. As we move through here, I write everything down of you know, all the different levels, and then I like to make a note at the bottom as to what trades I put on and why. All right, cool. So the next one up, we're going to do this one more time. Next one up here is for the pound USD. And this is telling us that the current price is trading at 57.80. And channel information on this one tells us that we have a channel top at 57.66 and a channel bottom at 56.95. Now 56.95 lining up on a short-term and a mid-term level as a channel bottom. So that's a little bit more weight there. If it moves to that level, that's a great spot to look for a buy. So we've got 2 of 3 at 56.95. To the upside here, it's quite a ways up, just kind of a number, you know, to consider for your back pocket, as we like to say, is 60.44, which is way up there for now. But if price gets up to that level, great spot for us to start looking for potential sells. But for right now, we're more concerned with 57.66 and then 56.95. So what are our support resistance levels also telling us? Well, we're trading at 57.80, so we know that right here, 57.79 is a decision point for us. And then let's see, below that, we've got 57.48 if it breaks down, followed by 57.15. To the upside, 57.79. What, we knew that, that's where we are. 58.37. So 58.37 to the upside. Are we trending or oscillating for the day on this one? Well, I think we can all agree we're trending up. So we're trending up on the pound USD. Has the channel been broken? Yes, it has. Have we broken above 57.66? We know just by where we're currently trading that it's broken that channel. So yes, the channel has been broken. What's our average daily range? Well, that's interesting. So today we've moved 107 pips, and our average range is about 99 to 115. So pretty much ranged out on this one. We saw a big push on news. It spiked way up here. And you know, got us. This is the 107. You know, that's measuring from bottom to top. Up here, so you know, 107 pips to there. So we're currently trading here 57.64 or 57.77 rather, 57.80. So what do we want to do? Last part of here is news. Of course, we know that there's no news coming up. And then Dow, that's not going to have changed much in the last 5 or 10 minutes. Really, we won't see much change there for the next probably 15 or so once the floor traders get on board. So futures market over here, no real change. So let's pop back over here. What do we have? Well, let's put our channel information on first, 57.66. So we're going to put this on here, 57.66. And 56.95. Let me just get this out of the way. 56.95 right down here. All right. And then we know that where we're currently trading here at 57.79 is a decision point. So we've got this one on the board right here, 57.79. And then, of course, if we push to the upside, we've got 58.37, which is a little bit out of range, which is up here. So that's kind of, I don't know that we'd actually push all the way up there. I think at this point, today we are in an upward trend, and what we've done here is we've broken, we pushed to the end of our range, is pulled back, and now it's oscillating, and it might just chop here for the rest of the day. Since we're looking at a kind of a lean towards a weaker dollar at this point, if we did pull back, and I don't know if we can even test it again, but if we did pull back to retest this channel, this daily channel top here at 57.66, this is a great spot for us to look for an entry, and so we can park an entry there. The other place to be here at 57.79, we're kind of a decision point right now. So if this breaks above here and gives us a closing candle as confirmation of direction, then we could look to actually buy it here off of 57.80. But for right now, because we're chopping around at this 57.80 point, I'm going to look back here at 57.66, 57.65 for an entry point. So I'm going to look to buy this one off of here. Take my first profit there. Yeah, I take my second profit just a little ways up from there. I'm not really seeing a sell on this. There's no support resistance levels in between here and this next one up at 58.37. So you'd really just kind of be looking at the range. If we did push all the way to 58.37, that would really be ranging us out. I mean, that would get us to 119 pips, which is pretty much our 130-day average out here, actually a little higher than our average. So potentially that'd be a great spot to look for a sell, but I don't really see it getting there with no news for the remainder of the day. So I would not even worry about it. So I'm just going to park a buy on this one, and what I'm going to do here is I'm going to park this buy and watch this level, but also I'll be watching this 57.80, and if it ends up breaking above here and closes above and gives us a second candle to confirm direction, then I'll actually adjust this up and I'll buy off of 57.80. But we need to wait a little bit for that to happen. In the meantime, we've got some time. This could pull back to here and give us another opportunity to enter, getting us a better fill before it moves. So I'm going to look for this one off of right now 57.66, 57.65, and we'll see what happens. But if this does push up, gives us a good healthy candle, and closes above with a second candle closing above confirming direction, then we'll buy this one. I'll adjust this up to buy on a retest. All right. So we'll give that one just a minute to see how that plays out. In the meantime, this is on, and we'll just wait and see. We want to be patient. That's the big thing here, is to take fewer trades and to be patient while we're trading. I mean, of course, sometimes it seems like, gosh, and that's so far away. I want to be in a trade now. I want to be trading, and you actively want to make a decision to begin doing something. And unfortunately, sometimes by having that, by wanting to do that so quickly, or kind of force that trade, you're not letting the full setup play out. So you really want to give it time to move, to come to you, to come to the area that you feel is the best entry, as opposed to getting caught up in what's happening in the current marketplace, or just getting antsy because the market's not moving. And today's one of those days. It's starting off so slow. It's really easy to get antsy and be like, gosh, I want to be in a trade. I want to trade. And it's best to kind of sit on the sidelines. Put your setups a little bit deeper and let price move to you. And if it doesn't get there, then cancel it out. Just close the trade. At the end of the day, you're much better positioned for doing that than you might be if you had forced the trade, trying to get something to happen or trying to make something happen. Because trust me, you and I, even if we combined our money, we're not going to make anything happen in this marketplace. It's going to do exactly what it's going to do at its own terms when it feels like it, or when the big boys choose to make it happen. All right, so the last one we're going to do this on, just again for practice here, on the US JPY, the US yen. We'll do this one more time just to kind of hammer it home. And it's this kind of repetition that helps us. We just have to repeat, and be consistent in our approach so that we can be consistent in our results. So here we are, the US yen. We're trading at 100.22. And what's our channel information tell us? US yen says we have a channel bottom at 99.67, and that's a 3 of 3 channel, by the way. This is what we were talking about earlier. So here we see a channel bottom, 99.67 for the daily, and then as we look up, we see that it's matched on the midterm and long-term level. So that's telling us that's a significant area of support for us down here at this channel bottom at 99.67. To the upside, the channel top is 100.86. And then above that 100.44 and then 104.05. So nothing really lining up there that gets us too excited. But here to the downside, if we did push down 99.67, great point of support for us down here. Currently we're trading at 100.22. So what do we have? Well, we've got support down here at 100, big psychological level, 100, 100.20, 100.50, 100.80, and then 101. So the whole numbers, big numbers for us, always going to be big numbers. So down below us we've got support at 100, and if we break through that, then we've got 99.88, and if we break through there, 99.49. And of course in between there we've got 99.67, which is significant for us for a resistance area. If we break to the upside, we have 100.44, and if it breaks through there, 100.88, which is right there with our channel top, adding a little bit more significance to that level as well. All right, so what do we have? Next up, we want to know if we're trending or oscillating. Well, so let's pop over here. We trending or oscillating on this one? Looks like we're oscillating a bit. We know that by asking ourselves, has the channel been broken? Have we broken above 100.86? The answer is no. And have we broken below 99.67? And the answer there is no as well. So for sure, just by looking at a chart, we can see that we're oscillating. Slight trend to the down, but oscillating nonetheless. And have not broken our channels. Average daily range, well, today we've moved 52 pips. And our average range is somewhere between, it's kind of skewed here, but somewhere between 90 and 120 on average range. I mean, short term, it's even tighter, 75 to 90 even. So what are we going to do with this one? We know that there's new news coming up, and again, I doubt that our futures market has changed significantly in the last few minutes. I would think it'll take a few minutes past the open before we really start seeing any movement here. So no, nothing really changing for us there. Nothing to be concerned about anyway yet. But do keep an eye on that throughout the day. I mean, we're just now, so what we're seeing right there is electronic trading, and the floor traders come on actually right about now. They'll start getting underway, shouting at each other, all the excitement there in the pits. So we would expect to start seeing some movement here in the next 10-15 minutes and see what occurs there. But for now, what we were seeing was a slight lean towards the positive, which would indicate a weaker US dollar. All right, so what do we have? Well, we know we've got this huge channel down here at 99.67. We've got 180.86 up here. Close enough. And right now, our other levels, we have 100. We have 100 down here. And if we break through there, just make this a little bit bigger so we can see it. We have 99.88. And then to the upside, 100.44. All right, so definitely oscillating around here. Since this is a whole number, I mean, this is kind of a no-brainer for me. I mean, of course, any of these trades, it can certainly very easily just blow right through it. You know, once you get some momentum there. But you know, right now we've got a couple of things here, and where's my stop loss? Huh. Man. Just make sure it's not, there it is, it was hiding out. It was hiding out behind that red line. There we go. So obviously 99.67 is a great spot for a buy. But even before that, there's, you know, we have this 100, which is a big hold number, and if price pushes down to that level, I would expect it to bounce the first time it gets there. So I'm going to look to 100 to take, you know, 10 pips profit and see if we can't get a reversal off of there without going all the way to 99.67. Now, if of course, if it breaks through there, we'll look to shut that trade down, and my next buy entry would be down here at 99.67. But right now, I'd be looking there. For the upside, for the sell, don't even know if I'll place a sell on it. If I really had to compress this channel a bit more, I'd be looking through here at 100.30. And you know, that yesterday looked to begin to be a nice support level for us here, and now resistance, resistance, resistance. So if we did push back up to this 100.30, I would we could look to settle off of that. But for right now, this would be the best trade for me, would be looking at this one. But we can go ahead and put it on as well. And what I've done here is, the reason I have to kind of scrunch that chart up a bit is, if you noticed, my take profit 1 and take profit 2, when we had the chart out like this, were off the screen. So in order to be able to see a little bit more real estate, I had to grab my price bar, and I just simply clicked it, and then I drag it one direction or the other to you know, either show more or show less. So that's how I was able to scrunch it up and see where those take profit levels had gone to. Sometimes they get pushed away. All right, so we're going to keep our stops pretty tight. We don't want to have a high risk on this, and then I'm going to enter to buy and sell. Now, so again, well, come on, click for me. I tell you, sometimes this clicker just does not want to work on my. There it goes. So now I'm going to move to buy and sell. So what I'm looking at here is a couple of things. We're saying, okay, 100 is a big whole number. So if we can push down to this level, it is an oscillating market. It's a slow market. I would expect it to bounce when it first got there. So looking to just peel off kind of a scalp trade there and grab a few pips on it, about 10 pips. We've seen this other level here at 100.30. I know it's not a number that's on the report, but we're seeing 100.30. This is really set up as a good resistance point for us over the course of this current session. So if we do push back up there, because we are in an oscillating market, I would expect it to bounce off of there and get us some pips. So that's what we're looking to do, is just set up some trades that we can look to get in, to take profit one, and then look for it to continue beyond that. Even if it doesn't, once we hit take profit one, our stop loss moves us to break even plus one anyway, and we've got a risk-free trade. We know what our maximum risk is to begin with because we've set that here with our stop loss. So we've got some low risk trades. They're at key levels, and all we have to do at this point is let price do its thing and move around, and then see where it goes from there. But we want to let price move to us. We don't want to choose the price right this second, and then then we start wringing our hands and hope, and we let price move to key levels and then do its thing off of those key levels. So that's what we've done today. We've got those set up. So I'm going to go ahead and turn my mic off, and I'll turn it over to Forex Joe and see what he has to add for the remainder of the session.
Okay, thanks a lot, Brian. I'm going to switch the presenter. So give me a couple of seconds here, folks. And let me get this taken care of real quick. And you should be able to see my screen now. And I put up a daily report. So we're going to kind of walk through these currencies one by one. As Brian alluded to, it's been a really slow week. And we knew that Sunday, coming off the non-farm payroll, we talked about this last week, has traditionally been slow. But we've had kind of a confluence of events. So the Forex market seemed to be held captive by the events in Syria. Of course, yesterday, as we go down here, you can see that the Euro-US dollar only moved 45 pips yesterday. Now, we've had 3 straight blue sessions. 4 of the last 5 have been blue after 5 consecutive reds. So we're kind of caught range-bound again. The key will be 133 and 33.29, as Brian alluded to. So we're also waiting for what's going to happen with tapering. September 17th and 18th next week, we'll have a special class before the FOMC next week, so everybody will be kept abreast of what's happening. We're now in where the powers to be are trying to negotiate a diplomatic situation and solution to Syria. Other part of the equation today is the 12-year anniversary of 9/11. There's ceremonies going on right now as we speak, both at 9/11 and also at the Pentagon. We also have the president speaking. We had a situation earlier today where Fox News replayed what took place on that day. Right now, CNBC is playing that. So we've got people distracted. There's a lot of distractions right now that's causing the markets to kind of just be in flux. Once we get all of this out of the way today, we still have a couple of days left for these ranges to be broken. Now, the Dow has risen 100 points the last 2 days. It was below 15,000. Last time I took a look, it was above 15.2. We've opened, and I think it was about 25 points up for today. I don't look for the Dow to rise up 100 points today, which is going to make it even more confusing. We've had gold that has unable to stay above $1,400. It's bounced back down to the 1360 area. We've got other key issues like who's going to be the next Fed chairman, the budget that's coming up, the debt ceiling negotiations. Everything's kind of taken a back seat because of deflections. Where does that leave us as currency traders? Well, this is an opportune time. If you're brand new, many of you are here, this is your first week with us, to get into a practice regimen account. Normally I do my reports at 5 o'clock Eastern, 4 o'clock Central. Because we've had such slow markets this week and leading up to September, I've taken it upon myself to give out early reports. So if you'll check, everybody should got an update. I put out a report, and you can see pretty much what I'm talking about. It's in the report right now. The yen remains the weakest currency this week. The commodity currencies, the Aussie dollar remains the strongest. The dollar was soft against the European majors. It's still in a tight range. We're looking for a sense of direction. This is where patience is of the utmost because we're not getting much movement. Right now, under current market conditions, you've seen the euro move what? It's moved about 40 pips, as Brian alluded to. Well, it only moved 45 pips yesterday. If you're a swing position trader, we're looking for a breakout below 32.43. We're looking for a breakout above 32.83. That's a 40 pip spread. Don't look for much of the action to happen today. Now, what I've done with the report is I've taken out the experienced trades because most of our experienced people know the numbers, and we have been compacting or compressing the channels. Now, we have this in videos. If you need to review it, review what's happening with compressing, compacting the channels, but we are awaiting the next breakout. So this is where patience needs to be a major part of your program, and this is where you can set all the trades in a practice regimen account and be done for the day. So with this confluence of events, coming off non-farm payroll, with the return of the European traders, with the situation in Syria, now with 9/11 and all of the remembrance there, we don't have much news coming this week. So what I'm looking for is range-bound markets. Brian's already alluded to about 133, 33.29, and if we can reach that pinnacle, what will possibly happen? If the Dow hits 100 points for the third consecutive day, we are going to retest above 32.83 and probably get near 3,300. Let me repeat that. If the Dow starts moving sometime during the day, and it looks like it's going to get near 100 points, we're going to retest this 32.83 high, and we're probably going to test the 3,300 area. If it stays below 50 points and in this area, it's going to be much ado about nothing. If it goes into a negative territory and say that it goes below 50 points, then we'll go below 32.43 and probably test down to the 32.19 bias number. And you can see the bias number right here is 32.19. We have videos on how to read these daily reports if you're brand new. I did an update yesterday, kind of sharing for people who've been on vacation. Some of you have been on vacation, God bless you, for a month. Some of you have been on vacation for 6 weeks. You wanted me to do a refresher course. I did. I also did a refresher course for some of our new folks. We are going to have action sooner than later. And when the action happens, it's going to be fast and furious. Remember, we still have the bulk of 2013 left. Once we get through probably this week and we get some kind of sense of direction and final resolution in Syria, once we see if the tapering is going to begin next week, we also have the European elections that I think is going to be huge. We haven't talked much about that, but the European elections are going to be huge over the next couple of weeks. Then we're going to have plenty of opportunity. You can do one of three things right now. If you're an experienced trader, you can rest. If you are someone that needs work or trying to expand your horizon, you can hone your skills by placing more trades with lower take profit 1 and take profit 2 opportunities. If you're brand new to the area, set your take profit 1s at 5 to 8 pips and execute every trade that you can in a practice regimen account to gain experience even in a slow moving market. Now, because we only move 45 pips, you'll see this: no official buy trades, no official sell trades. This is computer generated if you're looking at the daily report. If we don't have much action, then it will not generate trades. That is the built-in system that protects itself. Let's go to the pound dollar. We've had a little bit of action with the pound dollar in the simple fact that the pound dollar has broken above 5,800. Last I looked, we were around the 57.80 area, 57.85 area. We've had 3 straight and 6 of the last 7 blue sessions, and that streak looks to continue today. I continue to expect that the pound dollar will be closer to 145 than 160 by the end of the year. Now, that's a bold statement, but I'm going to stand by it. So we're going to be looking for some type of reversal soon. Will it reach 160? It quite possibly could, because of what's happening under current market conditions, what happens with the Fed. We have a series of events that could push us to 160, but it's not going to hold long term. So that is something that we were looking at long term over the next 2 months. Under current market conditions, we continue to push a little bit higher. We moved, in fact, the pound is probably going to be the winner of the top 7 currencies today. It's already moved over 100 pips. We're at the end of the buffet line probably for today. London will get ready to close here in just a couple hours. You can see that we've had 3 straight blue sessions, 6 of the last 7. All right, let's go to the US Swissy. The Swissy's only moved 40 pips. It's pretty much mirroring the US dollar. Why? Because they're inverse. If the euro US dollar is going up, then the US Swissy should be going down. That's the inverse pair. We've only moved 154 pips in the last 5 sessions. Not much to get excited about. I would be careful with this pair. If you are scalping, God bless you, but otherwise I would sit on the sidelines. Now let's go to the pair to where we have had movement. Many of you are still in from 97.01. Kirk executed another trade after non-farm payroll. He got in at 99.01. We have a screenshot of that trade. We're working on it. I'll do a video probably latter part of this week. If you have not seen our video that we did, it's in the members area. We executed 2 trades from 97.01 that we have been following for a period of time. Those of you that's been here that are veterans know from the latter part of 2012 all the way into 2013, we've been riding the US yen from the 79.50, 80 area, 82, 84, 86, 88, 90, 92, 94, all the way up to 103, then the reversal back down, and then again in 96, and then this 97.01, and now 99.01 area. There are 2 keys to this today. 2 keys for those of you that are currently in this trade. First and foremost, Kirk set this trade after non-farm payroll, after we talked about it. We also talked about it in the reports. I also talked about it on non-farm payroll. He took profit 1. Let's make sure I got this straight because of the numbers. His entry was 99.01. He took profit 1 at 100 pips when it hit 100. He took profit 2 at 129 pips. The key number is 100.22. I've been talking about 100.22 in the reports. 100.22 was the 6-week high that was met and broken above Tuesday. Now, last I looked, we were right around 100.20 area. We've been as high as 100.62 in this market. We've been as low as I think around what, 100.08. We're staying above 100, which is good. So Kirk has his last lot running. We're up 229 pips. You add the 229 pips to the 650 pips that we have 2 trades on that I did a video that's in the members area showing you textbook how to follow the trade plan reports. And now we are up almost close to 900 pips in just the US yen alone during the summertime blues and now into September. The point of my contention is you only need one huge winner when markets are range bound. That one winner will get you your 200 pips. We teach 200 pips a month here each and every month. The reason being that you can reach 200 pips in any current market condition. Yes, we have been blessed where we've had thousands of pips in a month, but to put that much pressure on yourself to accomplish that task each and every month is not only normal, but it is not feasible. It would put a tremendous amount of pressure on retail clients. But you have a sense of relief once you hit your 200 pips on any given month. If you take 200 pips in a $10,000 or $20,000 account and you let it run for 3 years or 36 months and you use the new word called compounding instead of debt. In other words, instead of paying and being a slave to debt, you start having your money work for you and you use the word compounding. This is how people with money make more money, because you compound assets to accumulate more. So once you learn about compounding and generating 200 pips in any current market conditions, you will be well on your way to having success in the Forex markets on a continuous basis. This gives you an opportunity that even if you trade for just a couple of weeks, 200 pips is possible. Some of you will have months where you'll have 500 pips, 1,000 pips. We've had months where you've had 4,000 or 5,000 pips. We call that planting the seeds each and every day, each and every week, each and every month. There are going to be harvests. There will be good crops and there will be bad crops. A lot has to do with the weather. A lot has to do in the analogy with current market conditions. We are trying to minimize risk and put you in an opportunity and give you an opportunity to make this 200 pips and let the system and the software work for you by taking out fear, human emotion, and self-doubt. This is why whenever you take profit one and your take profit one is hit, your stop loss is moved to break even plus 1 pip. So once again, everybody write this down. The key, which is in the report, is that the 6-week high of 100.22 was met and broken yesterday. We've been as high as 100.62. The key will be where we remain at that 122 area. Now, if for any reason we dip below 100, and it goes to 99.90, 99.80 area and reverses, your next entry will be 100.01, and I would take profit around the 100.22 area. That's as if it breaks out. I don't know if that will happen today. It may happen in the next day or two. You may be given another opportunity with this breaking down and then it comes back up. The other part of the equation is that we've had issues staying above 100.22, even though we've been at 100.60 today. So now we are in the area to where we're going to start having a little bit of a fight. We're going to be jabbing, we're going to be coming back with some uppercuts, and we're going to try to stay above this 100 area. So as an experienced trader, you now have an entry at 97.01. Some of you are still in the trade. Kirk went ahead and took the profit as a way to show how to use the system and take profit. Some of you are in the trade at 99.01. So now you have, some of you, 2 entries. Some of you have taken your profit like Kirk has. Kirk still has a lot open at 99.01, and I don't know what his stop loss is, but if it comes down below 100, he'll probably take his profit, and then if it does go to the 99.90, 80 area and reverses, he'll probably get back in at 100.01 with his take profit one. Because of a new territory, his take profit one will be at 100.22. So the bottom line is that you have this game plan in advance. Now, what does that accomplish? It gives you an opportunity to have calmness in the markets. You are only looking at numbers. Let me give you an example using a football analogy. Everything was built up about Chip Kelly becoming the new coach of the Philadelphia Eagles and how fast this team would play and how they didn't show anything in preseason. I used the Philadelphia Eagles as a top play as an underdog against the Washington Redskins. What was my mindset? Well, first of all, RG3, Robert Griffin III, had not practiced the entire preseason because of his ACL injury from last year. They were out of sync because they had not practiced. On the other end of the equation, this new offense with Philadelphia had practiced the entire preseason. In fact, they ran more plays in the first half, 53 plays in the first half of an NFL game, which was the most plays that an NFL team had ran in the first half since 1978. That's a little bit of history. They were able to score 33 points, but the problem was because you are limited in preseason, they actually ran out of gas and they had to slow down in the second half. So they actually had to slow down their fast break offense because of the heat and the fact of not being in utmost shape to run this program. But still, as an underdog, they won outright, and you had the probability factors in your favor. Now, what in the world does a football game have to do with trading with the Forex? Because if you use the same analogy only with numbers and learn the numbers that I have put together with 2 out of 3, 3 out of 3 channels, with the system that Brian walks through that has been proven over a decade, and you do this repetition and you do it day after day after day, you will become a fast break offense in the Forex markets that is skilled and also calm. And once you learn to overcome your attachment to money, you will be able to participate in a vocation for life. By keeping it that simple, you're able, as a retail client, to be a minnow in a shark tank and participate in a $5 trillion a day market. Think about that. $5 trillion a day. Many of you have lost your behind, for lack of a better term, in the real estate market, in your retirement from the 2008 to 2010 crash because you've lost your job or because you're getting ready to retire. You want to supplement your income. This is education to supplement your income. So the more education and the more you experience trades, whether it is moving, and trust me, we'll have periods of time where it's moving faster than a tick on a hound dog, or when it's slow like it is now, building and it's compressing and compacting the channel waiting for the next breakout. Those who participate, those who are practicing right now, will prosper long term. Taking a look at the Canadian had only moved about 39 pips. The Aussie dollar has only moved about 93 pips. It continues to flirt with 9,300. There is some news coming later on today. I put it into the chat. The Reserve Bank of New Zealand, the Kiwi, is going to be announcing their rate announcement and a company statement. Right now, the New Zealand dollar is right around 80-60 area. It really has been much ado about nothing today. It's been in about a 44, 45 pip move. I would look at the high and the low of this session of the Kiwi, and look at that for possible breakouts whenever that news event happens later on early this evening. I don't know if I'll give another report today because the markets, I've given you everything right now to outline what's happening. If you need updated numbers, if I don't put a report out at 5 o'clock Eastern today, after 5 o'clock Eastern, then just get the daily report here and use those numbers. And those of you that have been trading, use what Brian's giving you for right now, along with the current numbers that we all know are in place. Very, very soon, we'll be able to go back. We'll have movement. We'll go back to our regular schedule. But right now, everybody seems to like these early reports because you're able to trade during the U.S. session and then use the daily report, and you have kind of a second look with the computer-generated program of what the numbers are. With that, we appreciate each and every one of you. I've done this really good, Brian. We've got 2 minutes before 9 o'clock, so I'll turn it back over to you. And if anybody has any questions, I'll be more than happy to answer any questions. Back to you, my friend.
All right, thank you very much, Forex Joe. Now I think we're good. So let's give it just a second for some questions to come in, and if there aren't any questions, then let's go ahead and wrap it up, and we'll see everybody in the next class.
By the way, Kirk just said, here's an update, that he had his take profit 3 at 101 pips. It did come back and hit it as we went below 100. We're at 99.99. So it's another 330 pip total. There is the numbers. Take profit 1 was 100. Take profit 2 was 129. Take profit 3 was 101. 330 pips to add to the 650. That's now 980 pips on just 3 trades here in the last few weeks, along with what Brian's been able to accomplish with the trades in live current market conditions. I want to say thanks to both Brian and Kirk for their efforts. I will do a video. Kirk, take your screenshots. I'll try to get this video out by over the weekend. We'll add that to the 650 pip video that we already have in the members area. Back to you, Brian.
All right. Yep. And we'll have a recap of what we've traded today later this afternoon once these trades play out or are closed. My pound USD, or not pound, my Euro USD got stopped out just a second ago. I got a big spike there on the Euro, and it took me out for 8 pips across all 3 lots. But we'll recap all of this. I mean, and that's part of trading. Sometimes you do all the right stuff, and you still get stopped out. That's just part of it. You're going to have losers. You're going to have losing days. You have losing weeks. It's just part of trading. So, but anyway, we'll recap everything later today, get that in the members area as well, and then we'll be back for some more trading later this week. You guys have a great one. See you soon.